All right, good morning, guys. So this is a trade that I'm active on. So this is a trade that I've actually placed limit order. So if you resonate with, you can actually take it. I'm going to be explaining the logic behind this trade. You're going to be learning a lot of things, and this is actually a live trade that you can actually place. So if the logic behind this trade vibe with you, you can actually go and place it. I'm actually active on this trade. I posted it in my private group and in my free Telegram channel. So you're going to be learning a lot of things. You're going to learn about reading market structure, effective top-down analysis, down to top analysis, break of structure, how to define and maintain directional bias, and many more things. So, this is actually me showing you guys the trade I'm looking to take, and you'll be learning a lot in this session, right? So, this is the first trade we are looking to take. But before we come back to this trade, I want to show you guys the one that we took previously, right? So, um, the one we took previously was on Euro card, and this is the trade that we just took. This is actually a very nice 6 hour trade that we took, and I call this, I think, only in my private group because this is during the week. This is I call this when I started trading. Right, so this is the logic behind this trade. These are our simple entry model. These are our simple entry model. What are we looking for? We're looking for this pattern in our lower time frame, and we want to see this pattern occurring in our intermediate time frame valid point of interest. Then we go to our higher time frame to see if this trade is in line with the directional bias. Right? Is it in line with the order flow? If it's a bullish setup, is the order flow trending? If it's a bearish setup, is it a bearish order flow? So simple like that. So that's what we are looking for. Now, if you look at this trade, you can see the same logic happened there now. If you go to something like a 30 minutes time frame, you can see it's clear. So let me try to, before we go back to this, I want to explain this setup. So what is our setup? Basically, let's get rid of this one. So basically, what we are looking for is we want to see a liquidity sweep, then a break of structure, then this can actually occur in can actually form in two ways. So these are the two ways this can form. It can actually form in these two ways. Either way is still the same logic. So basically what we are looking for is we want to see one, liquidity sweep, two, a break of structure and structural liquidity, and we want to see that it's actually occurring in our a valid intermediate time frame point of interest. So now what do we have here? This can actually form in two ways. We can actually have a liquidity sweep, then a break of structure, then a second break, then this previous lower high will be forming as our inducement, our liquidity, structural liquidity. The price is going to take out and tap us in. So once we see this, then we can place our limit order. That's my entry model. And the second way this can occur in form of a liquidity sweep. Then price fail to break this, to have a market break of structure, then forms a structural liquidity, and then finally breaks it. So it's still the same thing. The main idea behind this is that we're looking for liquidity sweep, break of structure, and structural liquidity, and it should be forming an intermediate time frame point of interest. So now, what do we see in this trade? Now, this trade actually follows the same rules. So what do we have here? We actually have price. You can see what price is. Price swept liquidity, major liquidity at this point. After it swept liquidity, you can see that price actually swept liquidity at this point. This is where the structural liquidity, get rid of this and make it clear. So you can see that we have a structural liquidity. We have price sweeping liquidity at this point. Then when price sweep liquidity, we break structure. After we break structure, price retraced, forming our structural liquidity, then traded higher. So now what do we have? We are all the criteria that have met, at least three of the criteria have met, which is liquidity sweep, then a break of structure, structural liquidity. Then before we actually put active limit order, we can place our PNL indicator. As price is retracing, we just place our PNL indicator at this place. But before we take this trade, we want to do a couple more things. And what are those things? We want to go to the intermediate time frame to see if it is occurring in a valid key level. Since this trade is was taken on the 30 minutes time frame or 1 hour time frame, you can go to the 3 hour time frame or 4 hour time frame to see if it's occurring in a valid point of interest. Now, if you look at this thing, or let's just use the daily time frame for it to be clear, but that's the time frame you should use on a normal. So if you look at this thing, you can see that it's actually occurring on this other block. And if you are to read the market structure from here, you can see lower low, lower high, higher low, higher high, higher low, higher high, higher low, then higher high. All these things price is forming. So finally price retrace to this place. So as it retrace to this place, we are expecting a push to the upside to continue the normal market structure. So this pattern is actually occurring. This our entry model is occurring in a valid point of interest, in a valid order block. Then you can also look at the higher time frame, where you can see that the higher time frame is trending. So there's no need of, so it's in line, everything is in line, right? We have order flow, we have our entry model, then we have an order flow in our favor, then we also have the trend. We have a valid key level, then we have order flow in our favor. Yeah, so that's the logic behind this trade that I took. I can see this is a very beautiful trade that I took. Now let's go back to the trade that is currently active that we are looking to take, that I've actually placed limit order on. So this trade is on ED USD. So what do we have here now? We have the same thing. This is actually on the 1 hour time frame. So what do we have here? We have the same pattern we are looking for. And what is this pattern? What is the first thing? This is actually the bearish setup. So what do we have here? We are looking for a liquidity sweep. A liquidity sweep. Then we want to see either this can form in two ways. Either price forms a structural liquidity before the actual break of structure, or price break structure, then break the second structure, then the previous higher lower high will serve as our structural liquidity, and we place our limit order. And we want to see, most importantly, we want to see that this is occurring on our intermediate time frame point of interest, valid point of interest. So that's the rule of this strategy. Now, what do we see here? So the first thing we're looking for is an entry model. As we can see that price actually do what? Swept liquidity. You see price sweep liquidity. After sweeping liquidity, we have a market structure shift. In this case, it can be a break of structure, a market structure shift, still the same thing, right? So in this case, it just for in case if you guys don't know what is market structure shift and break of structure occurs in a trending market. Market structure occurs when the market shifts. Sometimes you guys call it change of character. It's still the same thing. So if I'm to explain this thing for you guys now, you can see what I mean. What I mean is that this is a market structure shift. This is a break of structure. All these things you are seeing here is a break of structure, right? So now this is actually a market structure shift. So this is actually a market structure shift. So what is different? This is a break of structure. You're having it's in line with the trend. You just breaking structure in line with the trend. But this one is a shift or a change of character. You see price actually shifting. It have shifted the structure. We have a shift of structure. So in case you guys know it. So the whole pattern still occurs on different, whether it's a market structure shift or a change of character. If it was if it was a change of, if it's in a break of structure, the way this one will occur is like this. Let's say price is trending, we have a break of structure. Now what we want to see here is something like this. Maybe let's say we want to see something like this. So do you see how we are following it? Still the same logic. So do you see this? It's still the same logic. So we're going to mark this place as our entry. So we just enter at the other block. So you see it's still the same thing. It's still the same thing. So it's still the same thing. I hope you guys understand it. Right. So that's the difference. So whether the setup occurred in form of a break of structure, a market structure shift, it's still the same logic. So that's the thing. So as we see this our setup and we have this house, we see a liquidity sweep, then a market structure shift, then structural liquidity form at this point, and then we have a second market structure shift, which is this second pattern we are trading now. So as price is retracing, we place our PNL indicator, but something else we need to do, that the next thing we need to look for is this. We want to go and see if this is occurring on a our intermediate time frame valid point of interest. Now that's the problem with this trade we are about to take now. This trade, it missed two criteria. And what are these two criteria? Number one, there is no valid point of interest that this whole setup is occurring, which can be the catalyst to the possible reversal. Right, so you cannot see any key level that this whole thing is occurring in. So that's the downside of this. And the second downside is that if you have to go to daily time frame, you can see that this is actually not in line with the order flow. Right? So if you guys don't know how I find my directional bias or my order flow, I like to make things simple. And I like to make things simple. I just look at the last couple candles, like 50 bars or thereabout, and I want to see, is it trending or is it bearish? Is there more of bullish candles than bearish candles? Is the bullish candles more aggressive than the bearish candles? And if you can look at this couple of price action, you can see that it's clearly bullish. Little retracement with huge expansion. So you can see that it's bullish. So this trade failed to meet two criteria. One of the criteria is that it's not occurring in a valid intermediate time frame point of interest, and it's not in line with the higher time frame directional bias. So these are the flaws of this trade. But beside that, the setup is nice, is clean. The entry model appeared picture a textbook. How did they say it? So that's it. So regardless of this is um these two criteria didn't meet, I actually took this trade because I believe even though this is not going to play out, we're going to have a little bit of retracement of like 1.5 hour that are going to set break even. And then even though price want to do this, and if you have to look at this, if you have to go to the, there's a daily time frame or 4 hour time frame, you can see that price, at least it wants to retrace a bit. It wants to, there's a lot of imbalance at this place. If you have to mark this range now, you can see that price needs to come down a bit. It needs to fill in some of this gap, and it has been trending for long. On the 4 hour time frame, it is at premium. It needs to fill some of this, it needs to trade to discount. So that's the reason why I just neglect that two checklist that didn't meet. So this is the trade that we are currently active. I'm active on the trade. The trade is currently running on my broker, and I'm also taking it on my profit. Yeah, so these are updates on the trade. If you guys want to be, if you want guys like this type of video, like the video, subscribe. Also click the link in the description to check out our free Telegram channel. We are posting more setups like this, and all the setups we actually posted there. And we're actually running a challenge which is to accumulate 200K in funded and profit capital, starting with the smallest profit. We have started this challenge before, and I'm trying to do it again, but this time with my students, right? If that's when you are interested, you can actually go to our Telegram channel, send me a DM. I'm very active on Telegram. Yeah, so this is the only trade I'm actually active on. I've not yet done analysis. This is still the new year, so this is still 5th of January. So I'm not very active on the chart, but the coming days or weeks, I'm going to be posting more setup, right? So this is the setup that we are looking at, and if it vibes with you, if you think it resonates with you, you can actually take it. And yeah, so that's it. I'll see you guys around.